Oil extends profits ahead of G7 discussions on Russian exports. Singapore oil fees extended profits on Monday as traders stood on shield for any moves towards Russian oil and gas exports that could come out of an assembly of leaders of the Group of Seven (G7) countries assembly in Germany. The prospect of extra supply tightness loomed over the market as Western governments sought approaches to cut Russia's capability to fund its war in Ukraine, despite the fact that G7 leaders had been additionally expected talk a revival of the Iran nuclear deal, which might lead to greater Iranian oil exports. Producer nations in OPEC+, which includes Russia, will probably keep on with a plan for accelerated oil output increases in August when they meet on Thursday, resources mentioned. But, for now, the pressing deliver concerns outweighed developing issues over the capability for an international recession following a string of downbeat U.S. monetary records. Brent crude futures edged up 22 cents, or 0.2%, to $113.34 a barrel with the aid of 0.342 GMT after rebounding to 8% on Friday. U.S. West Texas Intermediate crude became at $107.73 a barrel, up 11 cents, or 0.1%, following a 3.2% benefit inside the preceding session. Both contracts published their second weekly decline last week as interest rate hikes in key economies reinforced the dollar and fanned recession worry. However, oil expenditures remained properly supported above $100 a barrel whilst prompt month-to-month spreads remained extensive in backwardation as crude and oil product materials remained tight. Backwardation happens while spark-off expenditures are higher than fees for delivery in destiny months, indicating tight supplies. G7 leaders, who began their meeting on Sunday, are expected to talk about alternatives for tackling rising electricity costs and replacing Russian oil and gas imports, in addition to further sanctions that do not exacerbate inflation. These measures include a possible price cap on Russian oil exports to reduce Moscow's sales whilst restricting damage to different economies. It's doubtful whether or not a price cap will gain this outcome, Commonwealth Bank of Australia (OTC) CMWAY analyst Vivek Dar said in a notice. There's nonetheless nothing preventing Russia from banning oil and refined product exports to G7 economies in reaction to a fee cap, exacerbating scarcity situations in worldwide oil and subtle product markets. G7 of May also speak the prospect of reviving the Iran nuclear talks after the European Union's foreign policy leader met senior officials in Tehran to try to unblock the stalled negotiations, a French presidency authentic stated on Sunday. In addition, some of the G7 leaders are pushing for an acknowledgement of the need for new financing for fossil energies investment, assets instructed on Sunday, as European states scramble to diversify supplies.